Alicia Barry is here now with the day's business news. And Alicia, the banks are certainly stealing the headlines today.
They definitely are, Kim. Of course, on top of that class action, we've seen ANZ, the last of the big four banks to hold its AGM today, and it's used the occasion to join its peers in signalling it may no longer use the Reserve Bank's cash rate as the benchmark for its own mortgage rates. On Wall Street, the technology sector was in focus after software company Oracle posted lower than expected results, and that weighed on the Nasdaq.
Now Alicia Barry is here with the market reaction to the death of North Korean dictator Kim Jong-il. Alicia, how are stocks performing?
Well, Kim, markets across the region were already modestly lower on European debt woes, but they slipped much further immediately after the death of Kim Jong-il was announced. The news has sparked worries of political instability in North Asia. That's something investors don't traditionally respond very well to. The market closest to North Korea, South Korea's Kospi, initially slumped 5%, but it's now down around 3.5%. And while most stocks there have given ground, interestingly, defence companies and food manufacturers have actually jumped. Also not far away, Japan's main index has slipped around 1.5% initially. It's now just a little bit higher than that. Hong Kong and China's main indices have lost an extra 1% after the news, and they're each off around 2.5%. Well, in Australia, the local share market is focused on a lower profit forecast from retailer Billabong, as well as worries about potential credit downgrades for a number of EU nations. We've recently seen policymakers in Beijing starting to reverse some of those tightening measures that they put in place after the GFC. Is that set to continue into 2012?
2012 in China is about one big issue.
While the major lenders are trading mixed on the local share market, investors seem to like what they heard at the ANZ General Meeting. Its shares are up over 1%. Now, you mentioned we are seeing the Australian economy return to pre-GFC levels. Of course, we saw a two-speed economy then as well. How different is it this time around?
I think it's different to the extent that we are now all very much aware that what's happened to the Australian dollar is not a temporary cyclical phenomenon.
Okay, well, it's just past 4:15 now. The market's matched up. How have we finished?
It's been a very poor finish. We've finished near the lows of the market. The 200 index finishing down 119 points or 2.9%. The All Ordinaries index down 113 points or 2.7%.
So does that put us in a bear market now?
Technically, we're now 20% below the year highs. That is a bear market.
The Reserve Bank has highlighted Europe's debt issues as the biggest threat to growth.
Well, that's right, Kim, and the RBA says it's watching the situation closely, and the RBA says EU's debt problems are behind its December interest rate cut. In the minutes from this month's meeting, it says it's very hard to judge just how the situation in Europe will play out, but it's noted global growth was likely to weaken over the coming year. Interest rates are coming down in Australia now, so is cash as good a proposition as it was perhaps in the first half of the year?
Well, cash is still quite safe an investment if you think that you want to protect capital.
And Alicia, how's the market looking?
Well, Kim, our market is actually leading falls across the region after that emergency measure by the ECB to shore up European banks. The All Ordinaries index is off around 1.1% and the ASX 200 index is down a similar amount. There is nowhere to hide. That seems to be the warning from the chief of the International Monetary Fund. She's urging more action on the European debt crisis to head off the risk of a global depression. Cash Converters has grown tenfold over the last decade, and while it says the plans won't cripple its business, it says the caps on fees and charges proposed by the Minister for Financial Services will cover its costs at best. The All Ordinaries index is down around 2.4% and the ASX 200 index has lost 2.3%, as well as the retailers, energy and mining shares are leading the declines. And the Australian dollar is being sold off in line with other risky assets. It's currently buying 99.1 US cents. And I'll be back with a more in-depth look at the market a little later.